All right, let's get right to it. The signal from Asia is locked in. KSPI 3.8 trillion won, foreign liquidation activated. That's not a drill. This is happening right now. And what's the immediate results of that? Take a look. Negative 4.26%. That's not just a down day. That is a structural break in the KOSP. Okay, let's cut to the chase. Here's the bluff. The bottom line up front. That 3.8 trillion won flying out of Korea, that just confirmed a massive deleveraging event. Big funds are dumping assets, plain and simple. And here's why you need to care. It puts the Nasdaq's 23,050 support level on high alert for the US Open. We're talking about a direct link here. So let's dive in. First up, that red signal flashing over Seoul, a 3.8 trillion won capital flight. And I really want to hammer this point home. This was not just a minor dip, okay? This was a structural break. The whole market just fractured, down 4.26%. And the cause? A massive, high-volume liquidation. A fire sale, really, from foreign institutions. But here's where it gets really interesting. You have to look at where the selling was concentrated. I mean, look at this. Samsung Electronics, down over 5%. And its key strategic tech partner, SK Hynix, down a whopping 7.5%. This is the canary in the coal mine. This tells us it's not some isolated regional problem. No, this is a signal of a major reduction in global tech exposure. So that begs the question, right? Why was the selling so aggressive? Well, it's all about the feedback loop mechanism. Let's break down exactly what's driving this thing. The core concept here is something called the FX equity feedback loop. And it's exactly what it sounds like, a nasty, self-reinforcing cycle. You sell stocks, that weakens the currency, which then makes the stocks you're still holding worth less in your home currency, which forces you to sell even more stocks. You see, it literally feeds on itself. It's a vicious circle. And this breaks it down perfectly. Check it out. Step 1, foreign funds start liquidating equities. Step 2, they have to sell all that Korean won to get back into US dollars. Step 3, that flood of won on the market makes it depreciate, causing big-time losses for anyone left holding the bag. Which leads us to Step 4. Even more funds are now incentivized, no, they're forced, to liquidate to avoid getting crushed. This isn't panic selling, you guys. This is mechanical. It's algorithmic. And here's the proof in the pudding. It's crystal clear. On the left, the KSP is falling off a cliff. On the right, the US dollar index, the DXY, is spiking. The data shows a super strong negative correlation. We're talking a rho value of about negative 0.9. That's not a coincidence. That's hard evidence of capital flight, a stampede right into the safety of the US dollar. Okay, so this is where it all comes together. Let's talk about Nasdaq's contagion risk. We're going to bridge the signal from what just happened in Seoul directly to what could happen at the New York Open. And it boils down to one simple question, really. Is Seoul's problem about to become Nasdaq's problem? Is this a direct warning? Let's just connect the dots using the data. That KOSP drop, that screams a reduction in global tech exposure. The dollar-won exchange rate rocketing up to 1,529.6, that's a clear flight to the dollar, which puts a ton of pressure on tech valuations. But here's the kicker. Look at the US 10-year yield. It's down. And that tells us something absolutely crucial. Right now, fear about global growth is completely overpowering any benefit from lower interest rates. So all of this pressure, all these different signals, they're all converging on one single critical level. For the Nasdaq 100 futures, that number is 23,050. You heard me. That is now the global line of defense, the line in the sand. And this creates some serious tension, right? You've got the supply chain, that massive liquidation in Samsung and SK Hynix screaming bare. But then you have falling bond yields, which are almost always bullish for tech. That conflict, that tug of war, that is what's going to decide the Open. Okay, the conflict is clear. The lines are drawn. Time to shift from analysis to action. Welcome to the Tactical Battle Plan. This is your execution protocol for the US Open. Remember the core principle. Do not trade the headline. Trade the supply chain. Your entry signal, a reclaim of 23,700 on Nasdaq futures. This indicates buyers are absorbing pressure. Posture transitions to neutral. Your exit trigger, a breach below 23,050. This validates the liquidity stress is going global. Adopt a defensive posture immediately. Invalidation condition, failure to break either level. Do not engage. Stand down. Cash is a position. All right, moving to the final pre-market checklist. Time to confirm the signal. Here is your final check. Watch pre-market volume on Nasdaq 100 futures. Confirm only if a break of key levels aligns with high volume. Invalidate if the price action is weak and lacks volume. Log the result at 6:30 EST. No exceptions. That's the protocol. The Asia close before New York opens. If that's the edge you need to operate, then you know what to do. Subscribe. Be here for the signal.